Hi, I'm going to work through an example on screen of asset disposal. Okay, so this is one of the examples that you have a practice exercise you have there, right? So the idea is to understand what's taken place, obviously, conceptually. So sometimes the questions are slightly differently and set up slightly differently to challenge your thinking. Okay, so first of all, what I do is I normally set it up in a way that helps me understand things. What account's affected, whether it's debit or it's credit. Okay, so that helps me to actually have a bit of a work paper to work these things out. Okay, so the first thing I know is that we've disposed of an asset. So the rule is to dispose of the asset, we've got to empty the asset account. Okay, and we know that the Volkswagen Beetle, which cost 15, so that was the cost. So that's the motor vehicle account. We need to get rid of that asset. So it would be in there as debit 15995, so it looks like the only motor vehicle we've got. So to get rid of it, I need to credit that account 15995. Okay. I also need to get rid of the depreciation to date, right? So rather than it telling us what the accumulated depreciation is, it's told us what the book value is and what the historical cost is. Right, so from that, we should be able to work out what the accumulated depreciation is. Okay, so to work out what the accumulated depreciation is, I know that it would be a credit balance. Okay, it actually is there. I tell a lie, it is already worked out for us. Otherwise, it would have been that less that. Okay, so to get rid of the accumulated depreciation, 245. Okay, so that's doing that first part. Obviously, there's a difference between the two, and that is going to be what we got for it, and also basically what we gain or loss on the sale. Okay, all right. What else we also know is that we've actually acquired another asset. So in other words, we've increased another asset, and we've got another asset for 31750. Okay, all right, that's fair enough. Okay, and we know that we had to pay the difference between the trade-in and the motor vehicle, the difference in cash. All right, so that was money coming out of the bank. Okay, and that will be it will equal the amount that it would have cost less what we got for the trade-in. Okay, so that would have been the amount that came out of the bank. All right. Okay, I can work out what these tally to. Okay, so basically what we can see is that there is okay, so we've achieved what we needed to do. We've brought the new motor vehicle into the business at that value. We've got rid of the old one, and we've recognised the change. All right. Okay, and this figure's down here just to make sure my journal balances. All right. Okay, so now with those adjustments, that is going to reduce vehicle by that. Accumulated depreciation is going to reduce by that amount. The gain and loss on the sale, it's going to be a gain on sale. All right, and it is going to be the cash at the bank is going to go down by 28250. So plus we have got an additional asset, which should probably, this should give us our closing balances. Okay, that's debit obviously. This should come to 0. Okay, this one here should come to 750. So that's income, so it's credit. If it had been loss, it would have been debit. And the bank account would have changed by how much was spent. And really those should be our closing figures. And does that marry up with the answers? Yes, it does. All right. So that's working on the first one. Okay, if we look at the owner keeps the asset, again, I'll set it up as I normally would. Accounts, whether they're debit or credit. Okay. Again, I always find it useful to have work papers. I can tally those columns as we go so that I know when the balance of the journal balances. Okay, so in this scenario, it tells us Mark Allright has ceased business. Okay, all the assets were scrapped at nil value except for the motor vehicle which Mark kept for his own use. Mark obtained a valuation from a used car dealer for $18,000. Right, so the first thing you've got to do is write the vehicle off out of the books. So it's credit the asset account, what it cost. All right, that way the balance will end up being 0. Okay, you need to get rid of the accumulated depreciation on the motor vehicle. Okay, it's a credit balance already, so we need to do a debit balance to 0 it out. Okay, next we need to recognize that Mark has taken the asset for his own use, therefore the market value is $18,000. Obviously he's not GST registered or something, okay, so well, no GST in this, so therefore you can see that we've accounted for the motor vehicles taken out of the books, he's taken out a thing, so is there a gain or loss on sale. So by having a look at this, it's going to have to be a debit entry, and it's going to have to be for the difference, okay. Okay, obviously doesn't let me have a circular error in that, so I just need a, okay, cool. All right, so that should be the loss on sale. Okay, right, so if I do those adjustments, that's going to be if I post this journal, okay, gain on sale, it's actually a loss on sale, okay, so that's the loss on sale. In the drawings it's pretty straightforward, okay, so that's that, and then therefore our closing balance, nothing in motor vehicles, nothing in accumulated depreciation, loss on sale, drawings, okay, so that's a debit balance, and drawings is a debit balance as well. Okay, so that's how we dispose of an asset when the owner takes it outright. Okay. Thirdly, cash sale. Okay, so I set myself up with my workbook, and I have my check. My journal's going to balance. All right, which goes like that. Okay, I like to have mine showing dollars for some reason. Anyway, we'll do that. I like to have these in the center. And then I know that. Okay, so Salt Limit has sold one of its vehicles, which cost $24,995. Okay, so pretty much looking at that, they've obviously got more motor vehicles because the opening balance of the motor vehicles is a lot larger than the 24, obviously. So it's just, you know, an observation, okay? And it's motor vehicles, so it's plural, but in this case we just need to write off or get rid of the one that will cost us 24,995. So that's what we're going to reduce the motor vehicles down by. We only reduce the accumulated depreciation. Okay, so the accumulated depreciation at the 31st of March is provided to us. We don't have to calculate it, which is nice. We need to get rid of that, and that is 20,996. Okay, so that's 20,996. Cool. All right, so we've got rid of that. The sale price was 4,750. So they've told us it was sold for cash, so that money would have gone in the bank, okay? And that money's going into the bank, and it's 4,750, all right? Positive money going in the bank. Therefore, now we can work out what the difference is, and it looks like the difference is going to be like a gain on sale, okay, because we're going to need a balancing figure there, okay? And it's the difference between this and 24,995, okay? So that does balance it, so that gives us the gain on sale, okay? So we can put the adjustments in. This is going to be less the vehicle we sold. We're going to get rid of the accumulated depreciation we had on it. We're going to have the gain on sale, okay? And we're going to have the money going into the bank, all right? So it's money going into the bank, so it's going to increase the value, all right? So therefore we can get the closing balances. And if we copy this down, that should equal the closing balances. Okay, all right. Brilliant. We're heading in the right direction. Cool. So then the final one, which is the financial statement, EFS for financial statement, extracts, is only for this last example. Okay, so this is the one we need to pick it up for, right? So if I go there, it's an extract, so it's not the full balance sheet and it's not the full income statement. It's only an extract. So what it says is, how much is the motor vehicle closing balance? It is that. Okay, you can either, and it's going to be what's less the accumulated depreciation balance. Okay, and then that will be, okay, that will give you what the total current assets are. The motor vehicles less that, okay? Basically, is it a gain or a loss? I think we worked out that it's a gain, all right? And that is over in here. Here's the gain. Non-current assets. So that, yeah, there doesn't have a place for us to put the balance, the bank balance, all right? So that's correct, okay? Maybe resize that so it's proper size, okay? So there you go. So that's that exercise.